So the question really is, what do you want to be sold?
Okay.
And that might sound terrible. There's bad taste. Oh, no one likes to get sold anything. Fine.
Yeah.
But no one's a charity. No one does this for free. What is the relationship you want to be sold? Welcome to How to Retire on Time, a show that answers your retirement questions. Say goodbye to the oversimplified advice that you've heard hundreds of times. This show is all about getting to the nitty gritty so that we can understand truth behind investments, products, and strategies. As always, this show is not financial advice. Do your research, but hey, enjoy the ride. Text your questions to 913-363-1234, and we'll feature them on the show. David, what do we got today?
Hey, Mike, I've never worked with an advisor. What should I expect?
Yeah, this is a loaded question because you want me to say what I do and why everyone else is crap, right? It's so easy to disparage other people.
Sure.
I don't want to do that.
All right.
I want to, and please push back if I'm going too much in one direction or the other.
Okay.
I want to explain the financial services space as best as I can, as objectively as I can, so you understand what you're signing up for. And let me kind of set this example, okay? What's better, a chiropractor or a massage therapist? Now, you have to ask yourself, well, which one do you need?
Yeah.
Right? So, and I'm not a medical professional. I'm not a masseuse or a chiropractor in any capacity. But in my mind, those should work together, right? You might have some structural things that need to be realigned, but if the muscles are in the wrong place or too tense, they could keep pushing on the structure. So it's almost like you need both, but they're totally different professions.
Yeah, that's true.
Okay.
From my experience.
And which is better, a medical doctor or a nutritionist? Well, that's a dumb question because what if you have a broken arm? You want the medical doctor. I mean, no amount of kale is going to help heal your arm,
Sure.
right? But what if you don't have a huge physical issue or like an urgent thing? You just don't feel well. The medical doctor might not understand what a nutritionist would be able to provide to help with your diet and your exercise. That's just not how they're trained. And I love the fact that more hospitals are bringing in dietitians and nutritionists saying, yeah, look, you've got some issues. Here's some medication to help. But look, would you lay off the junk food a little bit?
Yeah.
Here's someone that can help you with that. So there's all sorts of different professions to where there are siloed professionals that are highly skilled in one thing, but you can't expect them to do something else. In finance, that's very much this a similar narrative, okay? I mean, if you're looking to get nutrition advice, would you ask a butcher? No. Now, I do have a butcher. Love talking to my butcher. I mean, he's going to tell me the good cuts of meat that are available.
Yeah.
I'm supposed to have more chicken. My wife is supposed to have more beef. So there's that. So anyway, I digress. In the financial world, you need to understand, first off, there are brokers out there. Brokers are going to make money off of transactions.
Okay.
That's how they are. And thank goodness we have brokers. So brokers in the broad sense, they're going to make sure that if you need to place a trade, that a trade's going to happen. Okay.
Yeah, where do the brokers work? Who do they work for? Where do I find a broker out in the wild?
I mean, brokers, they have a Series 7 license.
Okay.
So if you look them up on FINRA's broker check, if they have a Series 7 license, they can broker deals.
Oh.
Okay, so let's use an example. Let's say you are looking to broker a deal and buy an alternative investment.
Okay.
Okay, you can't just go on to Schwab or Vanguard and buy into a privately traded REIT. You're going to have to find someone that can broker the deal. So there's a privately traded investment, and then people will broker the deal so you can go through them to buy into that property, right? Or buy into that REIT specifically, real estate investment trust. Okay. It's not like you're just buying and selling a stock. It's a specific thing, and the deal has to get brokered. So, for example, we talk about Delaware statutory trusts a lot. Okay. You can't just go buy something like that. Typically, you'd have to go through a broker or someone that's licensed to broker the deal. Okay. Now, we're not brokers. We work through people to do this, and we've been able to negotiate ways that that commission that the broker would get goes to the client. But generally speaking, you're looking at brokers. So let's just take an example. A mutual fund.
Okay.
Classic investment.
Yep.
Okay. If you wanted to buy a good fund, good mutual fund with a good manager, solid track record, you'd have to go through a broker, whether it's a Schwab, Vanguard, someone on the phone, or maybe it's your Edward Jones advisor or whoever it is, all good people, all good companies. but they're going to get a kickback on them brokering that deal. Now you've got access to it, and
I
it might be
see.
like 4%, 5%, whatever it is, and it comes out of your money. But is there anything wrong with that? No. Brokers create transactions. That's their job. Is to connect the investment or the place you want your money to go with your money, and they just take a little bit off the top. And so it's like, I mean, I don't want to compare them to car salesmen because there's an unfortunate negative connotation with car salesmen. I've never had a bad issue with car salesmen personally. I'll go there and say, hey, I kind of like Toyota. Here's the car I want. And I'm not endorsing Toyota right now, but this was my Toyota experience. Here's the car I want. Here's the price I'm willing to pay. What do you got? They were able to broker the deal. They found me the car. Yeah, they got a commission from it. Do I care they got a commission? No. But it's a salesperson position. Do you see that?
Okay, yes.
That's it.
All right.
No problem with that as long as we call it for what it is.
Yeah.
Okay. Now that's what really moves finance at the most basic level. Okay. Now you've got brokers and money managers all over that are actually moving money around. So let's talk about, for example, if you were to buy an S&P 500 fund, you're not actually buying the S&P 500. You're buying it with a fund full of brokers. They're taking your money and they're buying all of those securities in different units. That's
Okay.
why they charge an expense ratio. That's why there are fees associated with it. I mean, the complexity amount of money that move through those things is incredible. And so are you upset about the fees? No, they're doing you a service and they're getting paid for that. Okay, are you with me in kind of this area?
Yeah. So brokers, essentially like salespeople, right?
Yeah.
Yeah. Okay. And that's, hey, they get a commission.
Are
Lots
you
of people do.
are you upset if you wanted to buy meat from a butcher? No.
No.
So
Okay.
there's nothing wrong with that.
Yeah.
But the problem is many people have confused brokers with maybe the financial advisor holistic advice you're looking for. Let me just put out an example, okay?
Yeah, that'd be helpful.
The equivalent of a broker would be an insurance agent on the other side of the business, okay? Okay. They both pay back-end fees. Nothing wrong with that.
Yeah.
But in either situation, you've got these two kind of dynamic situations where both believe, and I'm being a little bit pretentious here in saying this, but both believe that what they offer is like God's greatest gift to mankind. Like all roads lead to their solution.
Sure.
That's not really the case, but it feels like it sometimes. So which one's right for you? Well, depending on who you talk to, they're going to make a case that what they're offering is right for you. They're both going to make a commission, and they're both going to say, well, and they make a case like it's a conflict of interest if they could talk about the other ones. They only talk about what's in their lane. And I only sell beef. I don't sell chicken. If you want chicken, you have to talk to someone else. And then there's on this division. They both selling their products, but they can't talk about the other one. And then you have to kind of talk to two different people and get their sales pitches and somehow differentiate between the two. Do you see how that's kind of confusing?
Sure.
I read a lot on different financial advisors' websites. Someone will say, well, what do you think about them? I won't disparage them. But I'll see things like, what do you think about annuities? So they're securities licensed. And they'll say, well, annuities, we don't sell annuities. They might be right for you. They might not be right for you, but we don't really comment on that. Well, how do you give good advice if you can't comment on something that might be appropriate for someone and might not be appropriate? Now, look, for everyone listening, I wrote the book, How to Retire on Time. I felt compelled to write it as an argument against the guaranteed income for life philosophy. We still have people that come in and say, well, I just want a little bit more that's guaranteed. The Social Security is not enough. I would sleep better at night if you just guarantee this. I'd say, okay, you got a risk of inflation. You got tax risk. Are you okay with that? Yeah, because we have other assets elsewhere that can offset those things. I just need a little bit more of a baseline to sleep better at night. No problem. Now, if I was a broker that only could sell securities, how could I have a holistic conversation about that other investment or product?
Because, they really can't at all talk about it if they're not licensed as like an insurance.
If you're not licensed or if your disclosures won't allow you to talk about it, there's a lot of restrictions, and people don't realize this.
Yeah.
So you've got your people, the brokers that are making things happen. Great. You've got your insurance agents. They're making things happen, but they're kind of at odds with each other, which creates a lot of confusion. And then you've got the quote unquote fiduciary license. The fiduciary license is a Series 65 or Series 66 license, which really is fee for service.
Okay.
But even then, a pure fiduciary isn't supposed to have any insurance conversation with you because that's the insurance line. Now they have a conflict of interest. So the fiduciaries to hold that title proud, they're playing a role of a fiduciary, might say, well, we can only sell these things. So there's some issues with it. Okay. And even with the fiduciaries, you're operating off of their philosophy and how they believe things should be done. So you might meet one fiduciary who says you should be in a dividend portfolio for income and retirement. You might meet another fiduciary who says, well, we're fiduciaries, but we also recommend annuities, and here's why. And so the reason why I bring this up is there's so many ways you could structure licensing and philosophy and who you're talking to that it creates a very confusing conversation for people. So what should you expect from a financial advisor?
Yeah.
It's what they sell. And
okay.
it's not that salespeople are bad. That is not the case at all. I'm trying to open up the conversation of the complexities that so many people, especially in this industry, in financial services, are trying to do good. And they're doing the best they can based on the information they have that's available to them, the training that they've experienced. Some financial professionals will go to a week-long training on taxes and say, I can give tax advice now, and here's what you need to know. And it's worthless advice. Other people will go on and actually become a tax preparer, an enrolled agent, or CPA, get some sort of credential, start doing tax returns, and their eyes are open to all these other things that they didn't know beforehand, right? Some financial advisors will get their insurance license, some won't. So the question really is, what do you want to be sold?
Okay.
And that might sound terrible. There's bad taste. Oh, no one likes to get sold anything. Fine.
Yeah.
But no one's a charity. No one does this for free. What is the relationship you want to be sold? Is that right for you?
So do you have to know this kind of going in? Like,
it's so unfortunate. It's so, it's easier to do due diligence on a car. It's a commodity. It just is. Do you want a big car or a little car? Great. From there, do you want to go fast or do you want to go slow? Do you like the safety ratings? Like, you can kind of distill it down to the right car for you, right? In finance, there's so much gray area and ambiguity. Any financial advisor or investment advisor could sell you Apple. They could sell you Microsoft. They could sell you an ETF. They could probably sell you whatever mutual fund you want. They could explore. But then you have to ask, well, what's their fee structure like? And then does that fee structure influence then what they're doing? And does their fee structure allow them to afford their ability to properly manage the assets? Or is their fee structure built around someone else doing the money management and they're just kind of the relationship side of things? How does that all work? Does their fee structure allow them to service you if you were to buy an insurance product? Because insurance products don't typically pay, at least annuities and life insurance, they don't typically pay for year over year over year. So there might be a conflict of interest. They sell you these insurance products, and now you're not paying them enough from from an AUM standpoint, assets under management or percentage fee. They might not really want to talk to you as much anymore. They have to. So you have to ask yourself, what do you want to be sold, or what relationship do you want? And then from that point, who offers that? Some people want just the insurance guy just so they get access to the products they want, and that's it. They're going to do everything themselves. Some people want just the tax side, so they're going to look for a CPA that's more proactive and pay them for those services, and that's all of it because they got it all from themselves. Other people, they want a more holistic conversation, so they have to find the person that has the tax professional on staff, the investment advisor on staff, the agent on staff, and maybe even an estate professional on tax, whether it's an attorney or just the office has the ability to create your estate documents, and those are two very different conversations that they have, and they can do a more holistic standpoint. And yeah, the more holistic it might be, I think the better the conversation can be, but that might cost more money. And then are you willing to pay for those services? And does the fee make sense from a net of fee standpoint? Are you getting your money's worth?
Right.
Because it doesn't make sense to pay more for lower performance or pay more when you're really not getting tax savings. So there's a lot of complexity with that. I've probably just made everyone's life more complicated and worse off by admitting all of this. But the truth is, what do you want to get sold, and what are the rules of engagement or the terms and conditions of that relationship? clearly defined, clear as day.
Where do CFPs fall into this whole mess?
CFPs are investment advisors, so their credential will allow them to, I believe, just say, hey, they get the Series 7 license if that's what's required for their job, or a Series 65 or whatever it is. They just kind of say that credential is hard, so they can just kind of get the licensing and do that job. But a CFP, though it does have a very strong code of ethics, does not guarantee anything. It's a very difficult credential. It's an educational credential where then they go off and then they apply it in one way or the other. But the CFP still might have the opinion of everyone should have annuities, or everyone should have life insurance, or everyone should have a stock bond mix, or you should have a dividend. I mean, they're still going to have their own differing opinions. It's just they passed a couple of very difficult exams. That's it.
And so should people sort of, while they're trying to plan for retirement, should they just do some speed dating before they sign on the dotted line and have a bunch of conversations with people and feel them out before they dive in? Or
Yes. Yes. And here's the problem with that, though.
Okay.
Bad advice is the most expensive advice you can get. Because you get the bad advice, you have to pay for it, as in like things go wrong, and then you have to pay for then good advice. I don't understand the free analysis. Now we've done it ourselves. Admittedly, we've done it for ourselves, and we'll do it periodically. We don't currently offer a free analysis because we just have too much demand. But the reason why I say if you want a free analysis or free information, what you're really getting is a sales pitch. Here's what it could look like from this analysis if you were to work with us. It's almost a red flag. Now, you can do a free analysis here, free analysis there. You're basically just dating, saying, okay, if we were to work together, this is kind of what it would look like. And that's fine. But when you pay for an analysis, you're paying for a glimpse of their actual services with more objective advice. That is better, in my opinion.
Sure, yeah.
Because you can't operate as a business giving away free advice forever. At some point, it has to go somewhere, and you have to have it go towards the product, investment, or structure that makes them money. And this was the most liberating thing that we recently did. So we did offer free analyses for a while. We did admittedly do that for a while, and it was for sales. It was to get people in to just say, all right, hey, this is what it would look like if you were to work with us. We stopped that, and here's why. I'm too busy to do sales pitches. Everyone here is too busy to just turn and burn sales pitches and giving away people's free advice. That might sound weird to say openly, but it's true. However, if someone doesn't know if they want to work with us or not, and they pay, I don't know, $250, $500, and they get a comprehensive analysis, it's a win-win for everyone because we charge kind of by the hour. I mean, it's basically how expensive does the job, how much money does it cost to do the job? And then what level of services do you want? So if you pay $250, $500 for an analysis from us, you don't need to become a client to walk away with information you can actually implement on your own, and it's safer for both sides.
Right.
Because there's no weird, hey, so you ready to become a client at the end of it? You've paid us for a service. We've done that service, and it's usually focused on taxes. Hey, adjust these different funds over here, sell this, do this. Here's some tax loss harvesting. And by the way, this portfolio, here's the risk. We do the analysis and give you these takeaways to implement on your own, if that's what you want. But you could also say, I love the analysis, but let's finish the plan. And you do a one-time fee, and we build you a plan, and we teach it for you to manage on your own.
Yeah.
That's a very different situation.
Yeah.
And it's safe for everyone because it's clearly defined what you're getting out of the relationship. And then some people will say, either in the analysis or later on, no, I do want to become a client. They've already paid to experience what that would look like. It is the safest way to proceed because there's no angle. You're paying for a service. You're trying things out. I mean, how do you know if a restaurant's good? You go there once, and if it's good, then maybe you go back a couple of more times. Right? Free is a sales pitch. If you pay for someone's service, it's safer to understand how they really operate. That's my opinion. But I think it's principle-based in that I think it would resonate with a lot of people. It's just much safer. I don't know. What's your take on this?
Yeah. What should they expect? Well, we've gone through a lot, and
Well, let me on the expectation. Let me go there real quick. 'Cause we
Okay,
didn't
yeah.
even cover that.
yeah, what should we expect?
I think the gold standard for retirees should be that you're meeting with your advisor at least twice a year,
Oh,
that the
okay.
advisor is doing your tax return,
Yeah,
and then looks at the 1040 and then makes adjustments to your 1040 or the portfolio based on the 1040 to create efficiencies. I believe that every advisor should be reviewing the estate plan, not to give legal advice, but just to make sure that things are up to date and things are coded correctly and all of that. And then towards the end of the year, they're doing a mock income analysis for the following year on here's what your income could be. Here's your IRA to Roth conversions this year. Here's what your IRA to Roth conversions could be next year. Here's where you're going to take your income from. Here's how we're going to do it. So we're saving you thousands of dollars potentially
yeah,
as income. Here's how we're going to adjust your portfolio in a tax efficient way for the next year. Here's twice a year. You need to be having all of these conversations.
yeah,
And then when you need to buy a new car, when you need to have these other things, they're able to sit in those conversations. I also believe it's ridiculous that people charge a percentage of your assets to do basically the same job.
Mm.
I think the standard should be flat fee, personally, that you should have open connection to ask someone from the same company tax questions, investment questions, insurance questions, healthcare questions, and so on. And if you can't ask that from the same company from a holistic standpoint, then you have parsed information that can get complicated.
There.
So
I think we nailed it now.
I think meeting twice a year where your advisor is reaching out to you saying, come in, we need to talk,
Yeah.
and they're being proactive about it is how it should be done. If you're chasing your advisor to have conversations, I think that could be a red flag. Could be. I mean, if the expectation, like the brokerage conversation, if your expectation is you're paying the advisor just to grow your money and that's it, that's defined differently. But in retirement and the retirement preparation, there's just more conversations that need to be had. It's not just growing your money and hoping it works out. It's all of these other angles that need to be had. And that's an annual conversation. I think that's what people should expect from their advisor.
Yeah.
Hey, thanks for watching this video. Make sure that you like and subscribe first, and then go to www.retireontime.com to grab a copy of my book, How to Retire on Time, take a few courses about retirement, join my newsletter, and so much more. Now, if you want to work with one of our advisors here at Kedrick Wealth who can help you put together a retirement plan that's designed to last longer than you, just click the button, Get Started. Everything we do is intended to help you retire on time. We hope you enjoy, and we'll see you in the next show.